What business type do you need? Look, a lot of business owners ask us, are there 3, 4, 7, 10 types of business types that are out there, and which one do I actually choose? And that's exactly what we're going to decode during today's training. We're going to talk about the types of businesses that are out there. We're going to navigate the main ones, and we're going to talk about the one that may work best for you and your business. By the end of this training, you're going to clearly understand the types of businesses that are out there, and you're going to clearly know the benefits of each one to know which one may work best for you. And if you stick around to the end of this training, I'm going to get you access to our free mini course that's going to help you figure all of this out, as well as improve all aspects of your fundability. Look, we got a lot to cover, so let's dive in. So when we talk about business types, typically what we're talking about is entity types. And this is the type of business structure that you actually have right from the beginning. Now, there's a handful of main entity types that are out there. We're going to talk about each one of them during this training, the ones you want to avoid, and the ones that are more favorable for lenders and credit issuers, the ones that will help you get more money for your business. So look, let's get into the specifics right now by talking about sole proprietorships. So before we even jump into sole proprietorship, let's talk about setting up a new entity. When you set up a new business, you want to talk about the kind of structure that your business has. Maybe you're going to be a sole proprietor, a corporation, an LLC, or another entity type. So you're going to know by the end of this training which one of those to choose. But once you know your entity type, you're typically going to go to your Secretary of State and you're actually going to set up your actual business. So knowing the right entity type is one of the first steps of setting up your business. And even if you have your business set up, you want to get this right and make sure you've chosen the right entity type. This has a lot to do with being able to get the financing you need. So now, back to the first type, sole proprietors. So sole proprietorship is one of the initial ways that a lot of business owners get started. And a sole proprietor means that you are the business. You and the business are one and the same. As a matter of fact, most of sole proprietors, the business name is your name. And SBA refers to this entity type as basically a business owner experimenting with a business concept. So the idea there is that even SBA, lenders, credit issuers, really don't look as the type of sole proprietor as being a legitimate entity type for somebody that's in an established business. So if you're just experimenting with an idea and you want to see if a concept will work, well, being a sole proprietor might not be too bad. And in states like California, where it's very expensive to choose other entity types, this might be your best and most feasible solution. But if you are a sole proprietor and if your goal is to get capital for your business, you definitely want to consider changing to another entity type once you have a proven concept, because again, it's essential to not be a sole proprietor if you really want lenders and credit issuers to take you seriously. Now, before I go any further, let me first point out that I'm not an attorney, and this is not legal advice throughout this training, and I'm not an accountant either, and this isn't accounting advice. As a matter of fact, it's not a bad idea to spend time with your accountant or even with an attorney you know, like, and trust to have the same discussion about the entity type. Everything I'm going to talk to you about today is really about, from the perspective, helping you get the most capital to be able to grow your business. Now, that being said, let's talk about the second type of entity, which is an LLC. So an LLC is called a limited liability company, and it's kind of just what it sounds like. It actually limits your liability. So it puts a layer of protection between you and the liability of your business. So for example, if I'm going to go get credit cards for a business and I'm a sole proprietor, well, then I'm never going to be able to get away from personal guarantees because I am the business as a sole proprietor. If I ever default on credit, the business does, I default, and so the actual debtors can come after me individually. But if I'm an LLC, well, then now all of a sudden I'm obtaining business credit in the business name under a limited liability company. And in that scenario, amongst others like corporations, then lenders can only pursue the entity, not you. So it creates a layer of protection between you and the actual business itself, meaning you're not personally liable for a lot of the things that take place in the business. And for example, for lawsuits, and again, I'm not an attorney and this is not legal advice, for lawsuits it provides you a layer of protection as well. Because even though somebody can sue the business, they're not necessarily suing you at the same time like they were with the sole proprietor. It provides a limited layer of protection. Now, I say limited layer of protection because, look, there are businesses that do very unethical things, and as a result, the owners, the CEOs, are held personally liable for those things. So no matter what entity type you choose, if you're out there doing really unscrupulous things, you can always be held personally liable. And again, I can't say it enough, not an attorney, not legal advice, but things to keep an eye out for. But the bottom line is an LLC provides you a layer of protection. It separates you from the business. It helps you get credit in your business name without a personal guarantee in a lot of cases. And it also will provide you some type of legal protection where anybody coming after you really has to go after the business before they're able to get to you. So this is why so many business owners put assets in an LLC's name. So example, we have a lot of real estate investors that every property they own is actually in a separate LLC. I have a lot of clients that actually own airplanes and cars, and every vehicle or every plane that they own is in a separate LLC. Look, I just deal with a lot of entrepreneurs that have every individual asset they own in a separate LLC just to provide some layer of protection against that asset and separate that asset from them. So if anybody tries to pursue that accident, like the cars in a car crash, that it provides some layer of protection between them and somebody coming after the LLC versus coming after them as an individual. Now, let's talk about the third entity type, corporation. Look, if you're going to get money for your business, a corporation is the best entity type you could choose. This is the most highly regarded entity type by lenders and credit issuers. It's what you really want to choose if you want to be taken as seriously as you can be by lenders and credit issuers. Now, there's two types of corporations. There's S Corp, there's C Corp. Actually, there's more than two types, but there's two popular types of corporations, an S Corp and a C Corp. And the idea between the two of them is an S Corp, when you actually have profits or loss, it carries over into your personal tax returns. So this is really good for a newer business starting out. You might start a business, choose an S Corporation, the business is rolling, it's making some money, it's losing some money, that carries over onto your personal taxes. But the second main type of corporation, I should say, is a C corporation. And with this one, this is for bigger companies. Usually as your business gets bigger, you're going to want to separate those taxes. You're not going to want the profit or loss of the business to carry over to your personal taxes. Now, the negative about a C corporation is that you're kind of paying taxes twice. This is what a lot of accountants will tell you. The corporation's getting taxed, then it's paying you, and then you're getting taxed as well. With an S corporation, that tax only happens really once because the actual taxes or the profit or loss of the business carries over to you as an individual, and then you're paying taxes on that as an individual. But with the C corporation, you're still paying individual taxes on the money the corporation pays you, but then you're also paying corporate taxes at a corporate level as well. This is why C corporations are typically for businesses as they're more established and a little bit larger, and yes, you easily can switch between these entity types. So a lot of entrepreneurs will get started with an S corporation, and as they start really gaining steam, growing momentum, then they change over to a C corporation. Now, another of the most popular entity types is a partnership. And a partnership is, well, just what it sounds like. It's actually when you're coming into an entity with a partner. So partnerships are very common, especially in medical practices and legal practices, when you have equal ownership or multiple partners that actually have ownership interest. And partnerships are still looking at it with high regard by lenders and credit issuers, but again, corporations and LLC kind of have a higher regard when it comes from the perception by lenders and credit issuers. So you really want to try to choose an LLC or a corporation. Those are the best for you for legal and liability protection. And again, not an attorney, not accountant, not legal, not legal and not accounting advice. And it also is better for you being able to get financing. Whereas partnerships, really you only want to enter into if it's necessary because you're entering into the initial entity with an actual partner. Now look, the reality is this training can be 2 hours long if I broke down all of the different types of entities there really are. Like for example, just corporations. There's a lot of different types of corporations you could actually choose. But what I just provided you in this training is the main types of entities you need to know about and a little bit of insight on each one so you can choose what's best for you. Don't forget, the best step to take is to talk to your accountant, talk to your attorney to get their advice as well, and choose the entity type that does two things. One, makes it the easiest you can to get financing, and two, limits your liability as much and creates as much separation between you and the business as possible, so that way you're not liable for everything that's taking place in that business. So do you want to learn more? Look, the type of entity you choose is one of 125 factors that tie into how fundable your business is. And if you want to learn more about your overall fundability and more about the factors that control your ability to get money, then make sure you click the link in this description to access our mini course, which is 100% free and gives you insight into everything you need to know to building a fundable foundation that will help you get a lot of money to start and grow your business. And if you got value from this training, make sure you like and subscribe to keep an eye on our next training where we talk about more cool ways you can get the money you need to start and grow your business.